Good morning, everyone. Welcome to the Modern Market. It's our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. BST, every day of the week, where we discuss all things to do with the modern market. That is the crypto market, the NFT market, and the Mt. Gox market. Prices are in a little bit of a free fall at the moment. But we're going to get into all of that and more in just a little bit. But before we get there, just a reminder, friends, and nothing that we say here is financial advice. This modern market is exceptionally risky and we do not know anything for sure. So please do proceed with caution and exercise your own judgment. With that out of the way, legendary, it is Monday. It is the 24th of June. How are you doing? How are you feeling?
GM, doing pretty well. A couple more days until the Blast TGE, which is the main thing on my mind. And it makes the free fall of the markets very, very easy to ignore.
Is it that easy to ignore? It's pretty aggressive stuff. I put a tweet out this morning where I said, this is the most intense psychological warfare that I've seen on the timeline by various people who are invested in different things. You've got Solana people having a go at ETH people having a go at Solana. But then on top of that, just this macro bearish take right now, where arguably like we've topped for like for at least this period in the cycle, and very prominent people arguing that we're just going to go lower and the ETH ETF is not actually bullish. We're going to get into all of those like detailed pieces through the course of the show. But I woke up reading all the stuff. I was like, this is intense psychological warfare. Like how I wonder where people are coming out in this debate, whether they're on one side, the other side. I felt pretty confused, frankly, because I felt like I was getting pulled in different directions. Did you experience that at all?
Yeah, I think I know what you mean on the timeline, but I also think this cycle is the perfect example that like past performance isn't indicative of future performance, and so many people try to extrapolate previous cycles and apply those learning to this cycle when we have like a complete different environment. And at the end of the day, ETH is well above 3K, BTC is above 60K, and it has been holding on to that quite strongly for the last couple of months. And this is very, very comforting to look at. And not really too much in the altcoin or meme coin market, which is obviously way more volatile. I do participate in trading that, but my sentiment is mostly driven by looking at the majors, looking at BTC and ETH. And as long as we're above those 60K and 3K ETH, I'm very chill. And once we slide under those marks, I might be less happy on the show. But for now, I think all is very, very, still very bullish.
Okay, well, that's fine. So long as we're above 60 then for you, but we're getting pretty close. I think Bitcoin's down to 61 something now. So look, we're going to get into a lot of that at the moment. I just wanted to bring that up at the start because I definitely felt kind of smacked around, to be honest. Felt like each tweet from different people from each different perspective was designed to clobber me over the head with that particular perspective. And so I feel a bit beaten up by the aggressive nature of different people's perspectives going very much against each other. But look, we're going to try and break that down a little bit, try to make it make sense. We're particularly going to look at Kang's article on the ETH ETF and why he thinks it's actually quite bearish, and the various responses that have basically come off as a consequence from that piece. We're also going to look at the Pudgy Penguins news, which is pretty cool to do with Igloo. And then we want to get on to the Blast airdrop, which is coming in a couple of days' time with a few bits of estimations, few new estimations of where that FDV might come out at. So that's the shape of the show. Let's get into it, as always, by starting with the headlines and the price action, which is brought to you from the snapshot, which is the tweet, which is pinned up top. If you do find it brings you some value today, please do give it a like. I'm sharing it for the people watching in on X, and we're also live streaming on YouTube too. So let's get into it, starting with the price action. As I said, Bitcoin down 5% at 61.3K when I checked last. ETH also down 6%. I think it dipped just beneath 3.3K for a while. Solana down 6% as well at $125. The headlines are these. Number one, Mt. Gox, Bitcoin is ready for distribution. And the crypto prices are what they are, as I said. We're going to dive into that in a second. Number two, Pudgy Penguins announced Igloo parent company plus Redacted, which I believe is rumored to be the Pudgy token. Pudgy Penguins were up back above 9 ETH now. And finally, Blast transfers 14 billion tokens to a smart contract. Analysts speculate $3.5 to $5 gold, something in that region, I believe, is what people are coming out with at the moment. We'll break some of those numbers down in just a little bit. In terms of the NFT price action, we've got CryptoPunks bouncing a little bit up to 26.7 ETH, up a couple of percent. Bored Apes at 9 ETH, Mutants at 1.4, DGods at 0.8, Captains at 2.9, Azuki's at 3.1, Penguins, as I said, up above 9 at 9.1, and the Mad Lads chilling at 66 Solana. And the Nouns winning bid is at 4 ETH. Legendary, that is the price action. Those are the headlines. Before we get into a bigger discussion on the headlines today, is there anything catching your attention in the market more generally?
Yes, if we take a look at the Mintify heat map, there is one gaming collection in particular that's standing out to me that has pumped massively. It is the Sword of Grandia that is the key NFT in the Legend of Arcadia game, which is a tradable card game. Floors moved up 24% over the last day, and actually more than 70% over the last week. So they have seen a steady, well, not a steady, actually a very fast climb from 0.2 to 0.3 ETH, and then almost a double up to 0.6 or 0.57 ETH right now. Reason for that is probably easy to guess. There is a token coming, the community round. It has been announced a couple of days ago on X, and apparently the NFT holders are in a quite good spot given the recent price pump of those. Fair disclosure, I'm holding quite a few of these, have taken some profits, but still wanted to share it just because of the massive price pump.
Yeah, I think that's very fair. 25% up more or less in 24 hours. That's interesting to see. Like, I mean, as we've said with these gaming tokens, very often related to a token which is coming down the line. And I guess, would it be fair to say, Legendary, that people, when that token was announced, did the maths and maybe figured out what allocation they might expect and realized that the NFTs were undervalued as a consequence? Is that pretty fair?
Yeah, I would say that it's a very, very fair estimate or
Okay.
theory.
Interesting. So NFTs still moving under the right conditions, and the right conditions being a good token expectation at some point in time. A couple of other things, maybe looking around the market. CryptoPunks had a reasonable little bounce. As I said, I think they were down to beneath, they kind of flirted beneath 25 for a while. There were a bunch of sales going through on Blur in the 21 ETH region a few days ago. They're back above 26 ETH. So that's something to note. And what else on the NFT side? Well, I guess there's just a little bit of strength in the Pudgy Penguins market, or the market in general seems to at least have cleared out the bad debt, which was kind of spooking people last week. Remember, we did a deep dive into the NFT lending situation and how there was a lot of loans that were underwater. That seems to all be cleared now. And, Bored Ape seem to be around 9 ETH, Pudgy Penguins, very, very similar. So that seems to be in the clear. Legendary, your favorite NFT, Miladies, is still pretty strong above 5 ETH. Any other comments on that side of the market?
Love to see that. I think one more additional comment would still be going back to the gaming side of things. It seems that actually quite a few gaming assets are rebounding now. The Founders Pirates in Pirate Nation are up a couple of percent. Paleo, that AI game where you build a relationship with an AI companion, is up 3 to 4%. So I did see a couple of gaming assets. Also, Nexian Gems had a pump a couple days ago, starting to recover. And it seems that, at least on my timeline, that sentiment of is Web3 gaming dead has faded out. I mean, on the good side, on the negative side, but we're going to get into the news in a minute, seems to have shifted to, is the bull market over? But price-wise, NFT gaming assets seem to recover a bit faster than the general market right now.
Yeah, I think that's fair. Look, I want to get into the main stuff, right? The market is tanking a little bit. There's a lot of talk this weekend about the where we are in the cycle slash the impact of the Ethereum ETF, whether that is good, whether that is ultimately bad. I just want to set up a few different pieces, which we're going to get into. I'm going to share it on the screen for people who are watching in, but I'm going to read it out for the people who are listening too. So we had this piece by Andrew Kang, prominent investor, called "The Impact of the Ethereum ETF: An Analysis." And just for some context on Andrew, and I would have to say this: I don't know the kind of historical details of this person. I know that he's very well respected as a trader, as an investor. There were some tweets which said that kind of confirmed how well he has done, where someone said people are out here yelling at a dude who ran low 6 to 7 figures into 9 on mostly liquid funds, and how he's wrong. And people said, yeah, he literally started with 0 and he ran it to 9 figures. So this is just tweets on the internet. I can't corroborate whether that is true or not, but I assume, based on some of the ways that people kind of go off his work, that he must have done very, very well in this market. So it's an opinion not to just dismiss just because you disagree with it, I think. So that's the person himself. He wrote this article, "The Impact of the Ethereum ETF: An Analysis." It kind of sparked a lot of conversation, but maybe let's just get into that first. I'm going to do my best to summarize different bits. I might read from different bits to get you up to speed with it. I'm also going to share it beneath the space in case anyone else wants to read it in full, maybe later. But let's get into it. So he starts off by saying that the BTC ETFs open the door for many new buyers to make Bitcoin allocations within their portfolio. The impact of ETH ETFs is a lot less clear cut. He said he was vocally bullish for Bitcoin at 25K when the BlackRock ETF application was submitted. And now since then, it has returned 2.6x, with ETH returning 2.1x. From the cycle bottom, BTC has returned 4x, and ETH has returned a similar 4x. So how much upside would an ETH ETF provide? I would argue not much, unless Ethereum develops a compelling pathway to improve its economics. He goes on to explain, where should we go with this? He goes on to explain ETH has significantly less open interest than Bitcoin before the ETF launch, roughly 0.3% of supply represented in open interest versus Bitcoin's 0.6% of supply. At first, I saw this as a sign of earliness, but one could also argue that it belies smart TradFi money's lack of interest in the ETH ETF. Then he asks the question, this was a very interesting section, and I think very worth pulling out, because a lot of people got excited by the numbers in the Bitcoin ETF inflows. This maybe is trying to strike that down a little bit, but it's worth going through his thinking just to get some clarity there. He says, how did $5 billion bring Bitcoin from 40K to 65K? The short answer is that it did not. There have been many other buyers in the spot markets. Bitcoin is an asset that has truly become validated globally as a key portfolio asset and has many, many structural accumulators. Remember that Bitcoin has gone to 69K, and Bitcoin ownership before an ETF even existed. Market participants and institutions own a huge percent of spot crypto. Coinbase has $193 billion under custody, and $100 billion of that is from their institutional program. After 6 months, ETFs custody 4% of the total Bitcoin supply. It's meaningful, but only part of the demand equation. So I'm trying to find the correct section on. So he tries to compare this with ETH ETF, where he says that the situation is very different. ETH is at 4x the lows versus BTC being 2.7x before its launch. Crypto native centralized exchange open interest increased by 2.1 billion, bringing open interest to near all-time levels. The market is semi-efficient. Of course, many crypto natives, seeing the success of the Bitcoin ETF, expect the same for ETH and have positioned accordingly. He personally believes the expectations of crypto natives are overinflated and disconnected from the true preferences of TradFi allocators. It is natural that those deep in the crypto space have a relatively high mindshare and buy-in of Ethereum. In reality, there's much less buy-in as a key portfolio allocation for many large groups of non-crypto native capital. Let's see if there's any. I mean, this is a very, very long article. I'm just trying to pick out the key bits. He then asks, does that mean ETH will go to zero? Of course not. At some price, it will be considered good value. And when BTC goes up in the future, it will be dragged up with it to some extent. Before the ETF launch, I expect ETH to trade from 3,000 to 3,800. After the ETF launch, my expectation is 2,400 to 3,000. However, if Bitcoin moves to 100K in late Q4, Q1 2025, then that could drag ETH along to all-time highs. So kind of continues, but that's a general sense of it. One final, he kind of continued this tweeting spree a little bit later where he said, I'm trying to find the correct thing where he was talking about ETH as a common comparison for ETH is that of a tech stock. If that is the case, then the best proxy would be Intel. At one time, one of the hottest things into the world with unbounded growth expectations. A few bubbles later in its lifetime, but generally the first big one was the peak as it becomes more apparent that growth is bounded, innovation is slowing, and competitors are taking market share. So this is the argument that, yes, okay, ETH might be tech, but there's a lot of other people who are trying to do that. And there's a lot of historical examples of tech companies that were incredibly successful at one point in time, and then competitors come in and take their market share. So that seems to be the line of thinking that he is going down. I might stop there, Legendary, to get your thoughts. Obviously, this is someone who is very well respected, very well read in the space, has a good background on this. What's your take on this kind of flip to quite extreme bearishness on ETH? I have also read that he didn't necessarily rule out that, you know, this is still a bull market, like at some point later. It's just at this point in time, this is position that it's going to have to go lower for a little bit and is a bit bearish. What's your thoughts? Happy to let you take it in any direction first.
Yeah, as you said, it's a super long read, and it's interesting to go through all of it. Couple of individual thoughts that I want to point out on the open interest. I think one of the main reasons why BTC is loved by institutional investors is exactly the opportunity to not take directional risk, to go for the carry trade, buy spot and short the future prices and profit from the difference in those prices. So that is something that we've definitely been seeing. When Andrew is saying that he doesn't think that the majority of the pump is due to the inflow into the BTC ETFs, but due to other reasons, that actually would have been interesting to know more about that. But I've also read the whole post, and he's not really going into details with that. Another thought that I had was the deflationary nature of ETH. That is something that needs to be considered as well, especially if supply will get locked up in ETFs. And also, coming from maybe like a more institutional perspective, if you'd make the argument that you go for pure arbitrage on BTC, maybe you still would want to have speculative exposure to crypto, and that would be ETH then. And then if you want to make a final counterpoint on the things that you went through, if you compare it as a tech stock and compare it to Intel, you could also go the other way around and compare it to NVIDIA. Obviously, I'm not saying that this is my opinion. I'm just wanting to offer like a plethora of counter arguments to, you know, keep the discussion spicy and interesting. You could compare it to NVIDIA, and NVIDIA is a company that many people thought dead for a long time and just thought, yep, that's a graphic card. Gamers like that. Main competitor Radeon, and now it's the largest company in the world and has surpassed both Apple and Microsoft, and its market cap is higher than our entire fucking crypto industry because it's sitting at 3 trillion, and crypto is at 2 point something trillion, or maybe down a bit after the last correction. So all the arguments that he is bringing, you could argue the other way around as well. Like, I'm not saying that I'm disagreeing with that per se, but I don't think that the ETH ETF is bearish for ETH. The part where I probably agree with him is that we're going to see a stronger discrepancy between the multiples of ETH to BTC. So BTC becoming a bit more and more dominant. but I don't think that the ETF approval is going to turn out to be a net negative in the short run for ETH. I mean, people have made the same argument for BTC, and yes, it was priced in for a while until it didn't appear to be priced in any longer because volume picked up on that. But then again, and that's my final thought, Andrew is disputing that the volume in the in the BTC ETF is the cause for the BTC pump. And again, that would be to me the most interesting thing out of that post, to have more info what he thinks has driven the BTC price to its new all-time high.
So one point on that, and then one broader point for me. I couldn't find it in the actual article. It's such a long piece, but I'm sure I read somewhere else that he attributed it to, or maybe this was someone else attributing a lot of the volume to this basis trade that we've talked about, where a lot of people have entered into that trade, not because they have any interest in necessarily holding the asset. They're just doing the basis trade, which is very convenient, but therefore the overall numbers are not as good as you would think. Maybe if you could have a scroll, I'm going to try and have a scroll to find that section again if I can. But then the second point, I think the thing that I found quite helpful, which I do agree with, so I appreciate you bringing up some counterpoints, and I think a lot of people wanted to bring up counterpoints because they don't want to believe any of this stuff to be true. But the one thing I appreciated, especially from this, is just the pure numbers when talking about, look, what was the price of ETH at a particular time, pre-Bitcoin ETF and whatever, what was the price of Bitcoin then? What's the return been so far on some of these assets? And I think the factual aspect of that is that, look, these assets have been on a hell of a run so far in 2024. And I know he's going beyond that to draw out bigger conclusions about the ETH ETF itself. But one of the core things I'm taking away from this is just a reminder, guys, you're up. Like if you are holding these spot assets, you're up a lot over the course of a year or so, like a hell of a lot in a year, still up a lot from the start of the year. And I think that's kind of indisputable. And it's more just like a check and balance to be like, look, you're up a lot already. If you were holding spot and not gambling away all the funds doing other things. And I think from that perspective, it's just worthy to be like, okay, let's take stock here. What's the marginal amount who's the marginal buyer who's going to keep coming in at these valuations now a lot later, given how much it's already up? And look, I appreciate there's other factors that is going to determine that, but that's just one of my takeaways in terms of the numbers. Any reflections on that, Legendary?
Yeah, absolutely. Because I also made the point, you could also compare it to NVIDIA. Andrew has also made a counterpoint to that, which I also wanted to quickly read through to offer basically the counter to my counter. And he's saying it is a whole lot of hopium to believe that Ethereum is on the track of NVIDIA or Amazon. These companies had compelling plans for year-over-year growth and historical revenue growth to back it up. Ethereum has the opposite. NFTs are dying. On-chain trading is moving to other chains. Network fees are trending lower. This is really classic top of bubble delusion you see every cycle.
Fair enough. Interesting point. I think I'm going to bring in a little bit of an additional discussion point and kind of a back and forth that they had online with OSF, and then maybe take it in a slightly different direction. But I want to bring up that comment first, and here we go. So again, a couple of counterpoints from OSF was that I think these numbers are bang on, but the potential price impact on ETH is less clear. As you say, it only took 5 billion to move Bitcoin from 40K to 65K. There's an element of hype and marketing that brings new buyers. And I think you could see a let's run it back on ETH trade here, especially for people who missed out on Bitcoin. I still feel like sentiment on ETH going into this is pretty low. So there's surprise to the upside, but of course, sentiment is anecdotal and subjective. And Andrew replied saying the position for ETH is completely different. Derivatives data show the crypto natives are max long, even though people don't want to believe it. ETH is the same 4x up from bottom that BTC is without an ETF. So the pricing is there too. ETH does not have the same structural accumulatory buyers that BTC does. No MicroStrategy, no Tether, no family offices that are accumulating ETH on any magnitude close to the DCA flows that Bitcoin does. The broader world just thinks of and has much more different purchasing behavior with Bitcoin versus ETH than all of us in this little crypto bubble. And most people here are disconnected from that. And I think the one point maybe we didn't touch on, OV touches on it here, but that I do think is very legitimate is the BlackRock factor with their tokenized fund on Ethereum, and the fact that a large amount of TradFi probably doesn't even understand ETH because they've never used it. I actually don't agree with that. I think TradFi, based on all of the reports that we've read, understand ETH very, very well. Maybe it's not part of their portfolios yet, but I actually do think it's understood. But I think the BlackRock factor and the fact that they're building out on ETH, I think is quite significant. Any final reflections there, Legendary, before we take it in a slightly different direction?
Yeah, I definitely agree that TradFi understands what ETH is doing and what it can be used for. And I think it's also the final point on that important to keep in mind that you just don't need that much volume to keep ETH prices stable or even pump ETH versus BTC. So you just do not need the same institutional inflows, the same carry trades to happen for ETH, because again, it's just a 3 times smaller asset in terms of the market cap, and also you have the deflationary nature. So for it to dump from 3.1 to 2.4k, that would actually be a horrible outcome for the ETF, given all other things. So that's my final concluding thought on that.
Interesting. Okay, I do want to try to come with some more conclusive conclusions from us on this in a second, but one final perspective from Andrew that we want to discuss is I've come to realize that it's been surprisingly many people's first cycle and full bull market. For the entirety of this bull market, we've had extremely limited multi-day drawdowns on Bitcoin, limited to 20%. Many people seem to have levered up on the last correction in April. However, last cycle, we routinely had leverage wipes, which resulted in 30 to 60% drawdowns, wiping out collectively hundreds of billions of dollars. Although I am bearish, this is not a message telling you to short the market or market sell everything. Just make sure to watch your risk. Don't bet everything on one trade that could wreck you if we get a wider move than expected. I guess I wanted to talk here, Legendary, about the drawdowns. And I think that is also factually correct, which is it feels like we just teleported after we got to about 30K. I can't remember how long we stayed in that region. We then teleported into this 60K region. Well, this is how my memory is remembering it anyway. But like we've been just in this range, 60 to 70K for quite some time. And it feels like we've got very comfortable here. It feels like there's been nothing really to test or resolve too much, although people's sentiment and people on the timeline were still getting fairly emotional between swings from, I don't know, 67K to 62K or 72K to 66K. But that's not a hugely testing hold, I don't think. Whereas I do think it more accurate that there were wilder swings in previous cycles. Do you have any reflection on like the nature of the pullbacks and the fact that we haven't had as many this time? Do you think that's fair? What's your thought on that?
Yeah, that's something I absolutely agree with, and I've been saying it on the show many times. Look at this cycle, for how long we've been staying between 60 to 70k. After or in last cycle, once we hit the 69k, it was down only. We had massive crashes with both ETH and BTC, and we had the pandemic crash and everything, and we're in a completely different market right now with whether it's the ETF or not. I still think it's the BTC ETF because it kind of also enables exactly that carry trade. It's just removing volatility from our space. And I think additionally, what's also helping it is the meme coin season, because if you really want to be a more degenerate gambler on crypto, you can enter the meme coin market and hope for your 100x there. And you don't even need massive leverage to operate there. Whereas we've seen like more healthy leverage flush outs happening on the BTC side of things when open interest was just getting too high, which only led to 20% setbacks, which were quickly eaten up by additional ETF volume and inflows. So that's to me, one of the main points where I think that, comparing the last cycle to this cycle and trying to extrapolate the behaviors and patterns from last cycle to this cycle doesn't make any sense, because the ETF to me is so structurally different that it's a complete different market that we're operating right now than 2 to 3 years ago.
Interesting. So the idea is something like the previous volatility in majors can maybe be transported to these meme coins because of the huge increase in supply of meme coins, giving people a lot more options to gamble on those instead of gambling on majors and then kind of being in and out of those positions. They can go to these other coins to make their quick trades and do their more risky stuff. And then the idea that you would almost not even go towards ETH and Bitcoin to try to make those trades. Is that the thinking?
Yeah, I mean, that's exactly the summary of that. And I've also, of course, it's not empirically relevant, but observed it within my own circle of friends, where people who love to swing trade ETH last cycle with a couple 100K are swing trading the bigger meme coins, are swing trading WIF, are swing trading Pepe, because they have enough volatility there. They don't need to leverage up on ETH or BTC to do the same. And they also find that more enjoyable. But I don't think, if you look like basically at action and consequence, I don't think that it is a result of the meme coin market. I think it's a result of the ETFs and the volatility seeking, because we have the ETF, or we will have the ETFs, has moved more into the meme side of things.
Interesting. I kind of like that idea. I like the idea that that's where the volatility has moved, which maybe in some ways obvious, but I think the additional point to make in this cycle is that there's so many more of those options. Like Pump.fun has just created this never-ending hamster wheel of opportunity to gamble, and the various coins that keep getting churned out just give you an opportunity to keep putting your capital in those types of things. So interesting. I'm kind of persuaded by that idea. I want to throw to Funky. I've got a few more bits on this because we've spent the majority on time on this because it's obviously capturing a lot of mindshare and important to discuss today. But let's get to Funky first. Funky, your hand is raised. Welcome to the stage, my friend. What are your thoughts on this kind of distinctly bearish ETH ETF take? What are you thinking?
Jim, everyone. Yeah, I mean, I don't think it's as bearish as that. I think you guys made a lot of great points about just how this cycle is very different in terms of the volatility. The best strategy probably would have been to have a barbell of just holding Bitcoin in a basket of some of these successful memes in the last 6 months, and you probably would have outperformed just about everything. So, I think what these ETFs are ultimately going to do is just reduce volatility. We're seeing a maturing asset class happen right in front of our eyes. I'm glad you guys brought up the BlackRock thing, because that's the thing I wanted to raise my hand about earlier. You know, the people who are moving into this space are operating on a very different time horizon than the typical crypto degen who just like has a meltdown when the market moves 10%, and people are like, oh, what's happening, the whole market's crashing. I don't think that that's the case at all, right? For those of us who have been here for multiple cycles, we know how this plays out. But I do think that you guys are spot on, that it is going, and we've been talking about this for months, it is not going to be the same kind of bull market that we've seen in previous cycles. There's just way too many coins too. I mean, so I'm learning this as a more diversified investor in this space, where it's kind of hurting the returns because I'm more spread out, and that used to work, and I don't think it's really going to work now. So I think that there's nothing wrong with being long ETH. I think you guys are spot on with everything that you said in your analysis, and it's going to continue to power a lot of the infrastructure for the foreseeable future. So I'm curious to how it plays out, but I don't think I'm quite as bearish as maybe Andrew Kang on some of this stuff. In the medium term, yes, maybe, but across the next year or year plus, no, not at all.
Interesting point on like this idea of being diversified out. I remember specifically last cycle was my first cycle, and I remember specifically thinking or realizing that, damn, if you just buy anything right now, like it's just going to go up. Like there was this period of time where you could have bought anything and it was just going up. And I don't know necessarily if that is what will happen or is happening this time round. I do think say, I'm just looking at some random coins. Take Avalanche, for example. Avalanche has given up almost not all of its gains this year, but a lot of it. Okay, it's up 84% because it was down at $10 at one point. But if you got into Avalanche in, it was as high as $40 in December last year, and it's back down to 24 now. So it's definitely not the case that all of this stuff has been up only, or you just pick anything and it just goes up. In fact, this chart is pretty worrying to see how much it's pulled back. It's given up a hell of a lot. But my point that I was going to make in terms of diversifying stuff is I think in general, to be a top coin in the future, or now / in the future, is going to require a bit more than what has been required previously. And if you look at the top 15, 20 now, I think is starting to get closer to something which resembles like something which people think represents like a good basket of coins. Whereas I think previously you could go through and be like, well, what the hell is this? What the hell is this? It's in the top 20. I mean, even still, you've got Bitcoin Cash at 16. You've got Shiba Inu, the meme, at number 12 in terms of market cap. But you also have things like Ton joining in at like number 8 now. So I feel like, yeah, the diversification thing may not work as much anymore because there's so many more coins, and it's going to require more to be considered one of the top 10 or top 20 now. Legendary, I don't know if I made that point perfectly, but what's your reflection on this kind of supply of coins point?
Yeah, I agree. I think if anything, diversification needs a second component, which is time. So if you want to diversify your crypto portfolio for a shorter time horizon to ride a specific trend, whether it was the L2 season that we saw, or whether that was the gaming trend that we saw, then it makes sense. If you look at it at a longer horizon, then diversifying becomes, as you said, a lot harder because there's not many coins that can, over a longer period of time, keep up with the majors. Solana is a notable exception, which managed to establish itself over the last couple of years. But if you talk about diversification, I think talking about time horizons of that diversification is equally important.
Okay, I think that's fair. One of the things, let's conclude this topic here with being a bit more direct in terms of how this sentiment or price action is affecting us personally. Would love to hear your thoughts, Legendary. Then I'll share my thoughts before we hit the Pudgy Penguins news and the blast news. In what way is this sentiment and price action affecting your portfolio? Are you making any specific decisions as a consequence? How are you thinking about things at the moment?
Yeah, it's not really affecting the sentiment or the price action in my portfolio. Again, like for me, that clearance level is 3K and it's that 60 to 70K range. And within that, I feel very comfortable, to operate. If we would go under 3K ETH for a sustained period of time, then I would rethink some things. With that being said, though, once we were close to 4K ETH, I did move a fair bit into stables, but I'm not planning on now panicking into increasing my stable allocation. And I also just think from an engagement perspective, and I don't want this to sound dismissive because Andrew has shared some very, very intelligent thoughts. Obviously, a post like that is going to do way better in an environment where the majority of people is bullish. And then a bearish take that is well researched and well argued does better. And similarly, if you're in the depths of the bear market and you offer hope and come up with a giga bullish thesis, that will do well. Again, I don't mean this in a dismissive way, but I just don't want to, be influenced by the timeline suddenly changing its stance over a couple of days, similar to how we went through saying that Web3 gaming is dead. And I still believe that some games have a very good mid to long-term potential. So I'm currently happy with my allocation in stables. I'm watching the market as always. I think there's still fantastic opportunities. Again, after Blast, my focus will be moving to Telegram and see what I can do in the Ton ecosystem. And also obviously still participate in Blast Season 2. And I think all of these things can do very, very well, independent of the price action on the sentiment. I think Blur came out in the depth of the bear market and insta-launch to the $3 billion valuation and the $3 billion FTV. So the opportunities for someone who's like actively participating in the market aren't changing because of like 20% up and down swings. And I'd much rather focus on being an active participant and making money in this market than like being worried about if crypto's going up or it's going down a bit. Obviously, if I think that something is structurally changing for a longer period of time, then I will have to rethink some things. But right now, to me, it doesn't look like that yet.
Interesting. Okay, I have a few. Those are very interesting thoughts. I agree that in terms of opportunity, there's loads of opportunity everywhere still, even in this market. But the things that I wanted to say was, number one, I can't remember what I was going to say. That's unfortunate. Something to do with, help me out here, Legendary. What was I going to say?
Maybe your own thoughts in the meantime on how you're handling this and if you're adjusting your strategy, and then what you wanted to say might come up as well, because I'd be quite curious to, hear your perspective on that, because I do have like quite a strong opinion, but I'm curious to hear from
Okay, so I think that I'm quite persuaded by, okay, the reason why I think things might go down more is less because of some bigger bearish issue with ETH or Bitcoin or anything else. I think it's the summer still, and we are going to chop around still. And I think that that's going to chop up a lot of people, and people are going to capitulate certain positions because they're so impatient of wanting the things to go up. So this is not like a broader read on the health of the crypto market, or being bearish on ETH or Bitcoin or anything else, or looking at the fact that rates are going to come down soon in the States and that crypto is becoming more of a politically important topic in the States as well. It's more thinking that I think the timing, being in the middle of the summer, and the way the price action has gone so far, and the way people are reacting to the price action, makes me think that people are overweight and overexposed, and will maybe just have to take some chips off the table for their own sanity at some point in time. So that's why I think we either continue to drop or that we go below. So that's like a very human reading of the situation. That's my take. And in terms of what I've done, I'm not super informed. I'm not super moved by the overall argument. The main reason that I've been taking some chips off the table here is more because, as I described to you the other day, and all of the listeners, in terms of what types of things you can do to get on top of your portfolio and get a good handle on what's going on there, is I did this big spreadsheet of like where all of the assets were, and I just realized like I didn't have enough stables versus all the other stuff. So I've taken some chips off the table, both from the Solana side and on the ETH side, purely because I needed to make my portfolio make sense to me. So that was my thinking, and the reasons for why I was doing those things. Any thoughts there, Legendary?
Yeah, I think you're making a very good point on, people being over allocated, on still the summer going on. And I still think that the crypto space is so small. Again, it's like smaller than NVIDIA. And we are in a way bigger movement. We are running up to the presidential elections in the States. We have global economics to look at. We have tensions in different areas of the world. So I think all of those factors ultimately are more impactful and more significant than the amount of institutional buyers eyeing to buy BTC or eyeing to buy a potential ETH ETF in the near future. Whereas an escalation of the Hong Kong-China conflict would be way more impactful as a short-term event. So that is something that we tend to forget when we are inside of our crypto bubble, that we have actually a very, very small asset class. Compare that to stocks, compare that to real estate or everything else. And we are very much subject to what the major asset classes are doing, what global macroeconomics is doing, and what geopolitical tensions are evolving, or how they are changing over the course of the next couple of years.
Yeah, fair enough. I think that's a reasonable point to stop there. We might just touch on what the Mt. Gox situation actually was, because I realized we haven't actually explained that in case people didn't know. And then we'll try to touch on the other things, but we're running out of time for today's show. I feel like it was important to address that broader discussion point. And we've got a lot of people in here. We've got 170 live with us. And I think that was a relevant discussion to have. Look, let's do those final headlines just after the Web3 Roundup to get you up to speed with everything else that's been happening in the space in the last over the last weekend. And then we'll hit those final headlines. So just in case you missed it, number one, Solana announced ZK compression with 99% cost reduction. This got people very upset, the fact they were using ZK terminology. But just interesting to note that they are moving forward in that way. Number two, Pac-Moon and Mochaverse announced content collaboration rewards lasting 3 days. Next, Japanese public company Metaplanet issue $1 billion of yen in 0.5% bonds to buy more Bitcoin. Pantera raising funds for second ton token investment. Legendary mentioned the Telegram ecosystem being on his horizon. That is definitely the case for us. Next, Michael Dell, the 10th richest person in the world, posts Cookie Monster meme eating Bitcoin. That looks pretty delicious. Jason Derulo launches a coin, Jason, that went to a $3 million FTV, and 50 Cent deletes all tweets about coin launches over the weekend. So the celeb coin meta will not quite die a death just yet. We said we've got a few headlines to touch on. Legendary, do you just want to explain? We obviously talked why Bitcoin is down, crypto is down in the last 24 hours, but we didn't actually explain the Mt. Gox detail. Do you want to take that, or do you want me to just give a quick explainer there?
Yeah, happy to take that. Very, very short. Mt. Gox was a major exchange. It collapsed in 2014. Users lost around 850,000 BTC. 140K BTC could be recovered. There was a year-long lawsuit on how the Mt. Gox funds will be restored, recovered, returned to the users, and finally this distribution is bound to happen. And it looks exactly like that. There's 141,868 BTC valued at a bit more than $8 billion US dollars, and the same amount of BTC cash with a value of $50 million that is about to be distributed to the holders to the holders or former holders in the Mt. Gox exchange.
Thank you for that summary, Legendary, just to get people quickly up to speed. Funky, your hand is raised. Quick take here on the Mt. Gox situation.
I think that's just going to get gobbled up pretty quickly by the ETFs and everything else. But more importantly, I also just, was thinking about what you were talking about last week with the Germany thing. Like anytime the US government has ever confiscated Bitcoin or anything else, I'm like, why not just keep it? Why not just keep it at this point?
Absolutely. Wish they would just hold on to it, for God's sake. Why not? Look, we've got a couple more bits to get to. We've only got 5 minutes left. Want to touch on the Pudgy announcement, Legendary, because it's pretty cool for a couple of reasons. The first reason, for the people who don't know, Pudgy over the weekend announced Igloo, the parent company to Pudgy Penguins and Overpass. Their mission is to create the largest on-chain community driving the consumer crypto revolution. I would say this is what they said. Their desire for crypto adoption is not predicated on the fluctuation of crypto assets, but rather on pushing the boundaries of the on-chain experience. Pudgy Penguin serves as the brand that will be the top of the funnel to our ecosystem. Penguin's unique positioning allows us to create an emotional attachment to a brand that people are familiar with and trust. This image was the important image for me, Legendary, and I would like to know your take on this. It's a kind of, for the people who are just listening in, I'll try to describe it. I'm sharing it for people watching in on YouTube and on X. But you've got Pudgy Penguins kind of at the top of the funnel. You've got future Igloo Inc. products and brands at the bottom, Overpass IP above it. And then you've got Redacted just between, underneath the surface level of Pudgy Penguins and above Overpass IP. I'm assuming this is the informal announcement of a coin, because there's no mention of a coin in the written words. Do you think that's fair to say, Legendary? And then maybe just a quick take on generally how the Penguins are kind of changed the branding as well on this. It feels far more professional, adult, maybe just with a more corporate angle? All of this imagery, there's no penguins on view. What's your thought on this move?
Yeah, I think we on the token angle, we've been discussing this ever since we had that very particular wording that I still remember when we asked a couple people from the team on the potential Pudgy token, and the official answer always was, both in written and on Spaces, there is no Pudgy token. And that was to be a very, very clear wording of saying, yes, everyone knows that there is no Pudgy token, and the question is, will there be a Pudgy token? And the answer is, there is no Pudgy token. And back then we said that's a perfect answer to give if you want to have the option to have a token in the future and not be contradicting yourself to past statements that you've been making, but also on the other hand to for some reasons not have a token and still not be contradicting to what you said earlier. I think given the success of the NFTs, it's just very tempting also to do a token. And I think that over the last couple of maybe weeks, maybe 1-2 months, the token rumors have become stronger and stronger. And there's been many more hints. And that Eagle company announcement with a separate company setup, which is clearly the way how we do token launches with foundations these days, might be an even stronger hint of that. So personally, I'd be very, 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 very surprised if we didn't see a Pudgy token at some point in time.
Okay. I think that's fair. I mean, I've gone on record from the beginning saying, I think there will be. We have no concrete information.
You mentioned the Pudgy token earlier than me, in all fairness.
Yeah. I went on record saying that a long time ago. But yeah, as I said, we don't know anything. I think it makes sense. This seems to be confirming it. But we will have to wait for further concrete confirmation. A couple final maybe take, Legendary. People are adamantly interested in what will happen with Blast in 2 days' time. We don't want to beat the head over. What's the expression? We don't want to go overboard on this because we're going to be talking about it in 2 days, obviously, as well. But just a quick thing to close out the show. We've got 2 minutes left. Blast estimates from NFT Stats seems to have been increased to about $8.60. But no one else seems to want to believe that at the moment. From what I can tell, other people are thinking more in the $3 to $5 region for Blast Gold. What's your thinking at the moment for Blast coming out in a couple of days' time? Bullish, bearish, neutral? What's your perspective?
I think on the token allocation, it looks like those 14% are the Blast airdrop for the Blast farmers, and there's been more transfers or more token allocations to smart contracts, where the Blur farmers and Blur stakers will get 1% and 2% respectively. So that seems to currently be the established consensus, which would put 7% of the overall token supply into the hands of Blast Gold holders, which in my estimate, where I think, again, could be wrong with that, of course, that Blast will land somewhere between ZK Sync and Arbitrum, probably given the current state of the market, leaning closer to the $5 billion valuation or FTV of ZK Sync. That would put my math at like 435-ish for Blast Gold. But yeah, as you said, we will see what happens in 2 days. One thing that I saw today that I found bullish, we talked about it quickly before the show, is that it appears that Blast will have a day one upbid listing. It's something that Dingaling has pointed out, and that is a very rare thing to see. Upbid being a Korean exchange that we probably don't talk about a lot in the European and American markets, but a highly, highly relevant exchange. And OG Gaming is also saying in the comments, no 1 and 2 on the YouTube comments, that is, no 1 and 2% is for market, is in the 14%.
Okay.
So we'll just have to wait and see how that will play out on Wednesday.
Absolutely. We'll have to see how that plays out. We are watching, and we will bring you the information to the best of our ability as soon as we have it with some high quality analysis when we get the chance. Look, that's our show, guys. Hope you enjoyed it. Had a lot of people in here today. I think we got up to 170 live. We do this every single day, Monday to Friday, 7 a.m. Eastern time, 12 p.m. BST. We're live on X. We are live on YouTube as well. Thank you so much for joining us. We will be back every single day this week at the same time. We hope you will join us again and that you enjoyed the show. Have a wonderful day. Take care, and we will see you tomorrow. Bye-bye.